Can you all hear me now? There we go. Fantastic. All right, look at that. Yes, breaking things on this glorious morning, guys. Thank you so much for joining me for another episode of Breaking Bitcoin. Sorry that I am a little late today, a little unprepared. Not so much unprepared, but just had to deal with a lot of late-minute stuff, guys. All right, guys. So, what do we got going on today? It's February 26th. The first timestamp, 10 minutes late. Thank you guys for your patience. Hopefully it's working now. Mic seems to be working now. Everything seems to be coming in well. Okay, guys. January, January. Jeez. Okay, we're off to a great start. February 26, 2019, foul year of our Lord. Of course, another Breaking Bitcoin Market Update. I am Justin Wise, your host, guys. And I hope you guys are doing absolutely fantastic. Hope you guys are watching the markets, eating some popcorn. Not a whole lot happening. Low volatility, consolidation, pretty much across the board, with a few random pump and dumps thrown in here for good measure, as this is cryptocurrency. All right, so congratulations to everybody who had a holding in Engine Coin, up almost 150%, so fantastic, man. Thank you so much. All right, so let's do the normal stuff first. Of course, if this is your first time to the show, random stuff, guys, make sure to hit that subscribe button, the thumbs up. Highly appreciate it. You can also come join us over on Twitch at Cracking Crypto. We highly appreciate that as well, guys. All right, so let's go on over to news and stats. And I'd like to talk about, of course, guys, the X42 Masternode giveaway, guys. Mike still sounds slightly muffled. Let's try this. Any better now? Does that sound better? Hopefully it does. I've switched it to a round sound, so hopefully it still picks me up. Do some adjustments on the microphone. I've kind of hung it in a different space, blah, blah, blah. Not my field of expertise. Any hoosers. Yeah, so still giving away 5 masternodes worth of X42, guys. Just head on over to x42.crackingcryptocurrency.com and you guys can take part and get your chance to win a full masternode of X42, guys. There we go, much better. I think, yeah, because I had it on projection, so I think it's projecting that way, but because I hung it differently, now I have it surround. So, all right, great. That's good. Hopefully good. All right, hopefully it just doesn't pick up the whine from my GPU fans. 5 days left in the giveaway, guys. 1,260 people in this competition so far. Thank you so much for making this really fun and enjoyable for us. Of course, we're going to be following this up with more giveaways. We're going to keep this thing going all the time. Let's see here. I'd like to start off today. Oh, yeah. Okay, so from the 28th to the 5th, we're going to have a 15% off discount on everything in the merch store, guys. So I know some people have been asking for it. We are working on making some new t-shirt designs, so hopefully we have that done by then. But if you guys want to pick up your HODL shirt or your Cracking Cryptocurrency coffee mug, it's all going to be in there and for cheaper. So again, every morning with this bad boy, 85% more success in my trades. Scientifically proven. All right, that's enough of that. I'd like to start off today with talking about and giving a shout out to our new blog author, Joseph Jankowski. So he is graciously writing blog posts for our website. So make sure you guys go on over to crackingcryptocurrency.com. You can hit up the blog section right there in the top header section and keep yourself up to date on the latest news. I really like what he's done so far is he's actually, you read stuff on CCN and Cointelegraph and things like that, and it's all just recycled news. This is reaching out, trying to get comments from the Tron Foundation, reaching out, trying to get comments from developers. So this is really cool stuff, man. Anyways, just an overview of the Tron hard fork coming out. Everybody's really got their eyes focused on the Ethereum hard fork, but of course, Tron is also having a hard fork upgrade as well on February 28th. The 3.5 hard fork upgrade will occur on the 28th. Apparently their upgrades are they're going to have multi-sig capacity now, so you can have multi-sig Tron wallets for added security, which is pretty cool. They're going to, they tout this as being institutional grade money ready. So now institutions don't have to worry about what's the word? What's the word I'm looking for? I'm going to mess this up. Institutional custody. Okay, so for institutional investors, the biggest security issue with cryptocurrency is, how do I keep it? How do I hold it? How do I keep it safe? How do I keep it secure? I've heard all these stories about hacks, exchanges, this and that. Malware on Electrum, for example, and that's their biggest concern. Like when you have, and for those of you who don't. To put you in the mindset of somebody who has a lot of money, they're more concerned with preserving their money than they are with making more money. Once you have a certain amount of money, once you're a multimillionaire, for example, the most important thing for you is just not giving much of that away in taxes back to the government, and B, making sure that nobody can take your money. Making more money on top of that kind of becomes a tertiary element, unless you are an extremely driven and focused individual like the Jeff Bezos of the world, like the Bill Gates of the world, who just want to take the whole thing over. Custodial, yes. Let the non-native English freaking Dutchie tell you the English word. Shout out to all the Dutchies in the house, man. Okay, so in addition to multisig and preparing themselves to be institutional ready, they're also going to have a dynamic energy adjustment. I really like the clickbaity words that they're using for that. But anyways, basically all that says is they're going to improve their network performance. So they're going to be able to handle more transactions per second. Transactions are going to go through faster. They're going to be more seamless. You're going to be able to push more kilobytes into a transaction, for example. And according to them, a 50% increase in performance and better VM safety. So running developing dApps and virtual machines is going to be safer as well. So if you guys want to read this article, there's a lot more information on here, of course. Just go to the blog at the website and you guys can hit that up. Let's go back to the blog. There's one other article as well that I want to go over, and that is on the Ethereum hard fork. So right here, if you guys see, here's the blog right here. And the newest one from Mr. Joseph is about the Constantinople hard fork. So make sure you guys go over here, get yourselves educated on what's going on. No more demon voice. Well, here's the thing about that. I moved my microphone around last night, and that's how it was before I just switched it before the stream, because it was inappropriate. It was inconveniently placed again. So I think I'm just going to have to go get a different boom arm, or try to come up with, I'll probably have to go out to my garage and just build something. I'll just have to build a stand over here that I can attach the boom arm to. There's not a lot of places to mount it that's convenient for me. So it's back in the configuration that could potentially bring on the demon voice. So you guys got to let me know if I start dipping into the subliminal satanic verses. Just let me know so I can unplug and plug the microphone back in. We try to keep it very professional here on the show. All right, guys. So we've got the Constantinople and St. Petersburg forks right around the corner. And you might be asking yourself, why is Ethereum forking twice? The short answer is because a lot of individuals already upgraded to the Constantinople fork. So the chain is already split technically, and they're handling it the best that they can. But essentially, the Constantinople fork is going to immediately push out the St. Petersburg fork and then revoke it and push forward to the Constantinople fork, I guess is the easiest way to explain it. Basically, they boo-booed and they're going to fix it and it's all going to be good. Not a huge deal. Still a lot of things coming with the Ethereum hard fork. Apparently, they have fixed the double spend attack, which double spend is not exactly the right word. It's not a double spend necessarily. It's that a smart contract could, by all rights, pull money from an account that it would not normally have access to, and that's because of the gas feature. So Ethereum was written with somewhat of a fundamental flaw, and that is that smart contracts, when they communicate, one smart contract can force another smart contract to execute a command, but it has to spend gas to do so. So the fix was, and I guess the natural fix was, making gas expensive. But one of the Constantinople upgrades is making gas very cheap. So, and this is going to allow more communication, more things to occur within smart contracts to be able to build more advanced smart contracts. The major upgrades in the Constantinople upgrade are going to be making dApps easier to program, making dApps faster, making smart contracts faster, all these things. It's really going to be for the developers, more precise language. But I guess for a consumer, on the consumer end, I think the most noticeable thing that you will notice is that there should be a dramatic decrease in the cost of gas. So it's going to cost you a lot less in transaction fees to send transactions or to run smart contracts. Thanks, James Jeffers. No, I think they're dropped as far as they can go. All right, let's see here. I do want to say hello to the chat, everybody. I see Jasper, of course, Texas Blues, Anthony, T. Joe, what's going on? Hello from Croatia. Well, hello from the Midwest. Mr. Ether, what's going on with you, my good dude? Mr. Heron. Dream Piercing Maya, what's going on from South Africa? Good to see you. Jay Constant, good to see you, man. Frank Godding says, what's up, Bitcoin? Jabba TV. All right. If I missed anybody, I apologize. I do want to get some of these comments are funny, man. Levon Vartanian says, do I see any possible swing trade setups on ETH? Cooking, just wondering. I'm going to get to that. My basic analysis of the market is to sit tight, just kind of sit on your hands, man. That's just kind of my personal opinion. Moritz Unseld, Guten Morgen von America. Charmaine, I see ya. Jay Way, are we going to moon or what? Eventually. B&B, we'll take a look. We shall take a look. Let's get over to the main charting, guys. Let's go over to the main charting. And let me head over here and I'll add B&B to the schedule. So let's go ahead and update the schedule. All right, BTC, ETH, and BNB. All right, great, fantastic. I really like that it somehow has moved itself there. You know what? Let's just deal with it. Sorry, guys. There we go. Maybe I'll add like a black background to that. So it's just black and everything out. Background color. Maybe if I just add a black background color and then make it super opaque. There we go. How's that? It's not as clean as I'd like it. I'll have Scott make me something custom, but at least you guys can see what we're doing now. All right, cool, man. What about Fetch AI? I don't know anything about Fetch AI, man. Do I think Bitcoin has bottomed, total capitulation or not? No. I don't think so. Hey, Jurgen, good to see you, man. Do I think Ethereum's a good buy right now? No, not necessarily. What's up from Ireland? Nerd Robert says, King is naked. Look at sell orders at Binance. 9-foot couch. I like that, man. Found you last week. Good stuff. Thanks for sharing, man. I appreciate it, man. We got Belgium in the house from John Brawl. We got Sean Bond Europe in the house. Usman Showcat says Neo. Let's check out Neo, man. Usman, I see you in here all the time, man. We will take a look at Neo. Usman, you got to make up your mind, man. It's got to be Neo or it's got to be Cardano. Nerd Robert asks, what is my thoughts on hyperwave and bottoming below 2000? I don't cast aspersions on anybody. I don't say that anybody's method of analysis is wrong, because there's lots of different ways to look at the market, and I know most people are infuriated by that trader speak, but me personally, I don't put a dime's worth of weight on anybody that says A, B, C, D, E, F, G wave does this X, Y, and Z. None of that makes... I've studied Elliott wave analysis. I don't think it works. In fact, I'm confident that it doesn't work. Anything that works in hindsight, because seriously, the problem. Okay, so let me be very nuanced in this, because I talk about this a lot. I'm sure there are Elliott wave theorists and Elliott wave. There's some great Elliott wave analysts out there. It might be fantastic for analysis, but it's something that would probably take a very long time to master. And the problem that I see with Elliott waves, especially specifically to cryptocurrency trading, is that a lot of individuals who are trading cryptocurrency don't have a lot of experience in traditional assets and traditional equity or Forex, for example. A lot of you are fairly new to just trading, and cryptocurrency is the only thing you've traded. So that's one thing right there. The second thing is that there's a lot of these Elliott wave analysts on Twitter, on YouTube, on social media, and their charts seem to make a lot of sense. But you're going to see stuff like, they're hindsight traders, right? Because they'll post charts and they'll be like, well, it seems like we are putting in an ABC wave, but on a higher time frame, it could just be a truncated XYZ wave. But, it could just break down into a zigzag pattern with a double bottom, and it just makes no sense. And then they'll just change their chart to reflect whatever happens. This is something that I teach beginner traders. By the way, Ron Legato, thank you so much for the $10 donation, man. You are one of the good ones, man. Thank you so much, my good friend. Elliott wave, your money goodbye. Anything, if you are an Elliott wave trader, and you are successful, awesome, dude. Awesome. In fact, I wouldn't even mind having you on the show, but I've met a lot of analysts, but I haven't met any Elliott wave trader that I'm saying that I can ask, hey, great, man, that's fine. Can you show me your, can you show me your statement of account? Can you show me your equity curve? Can you show me like your CSV from your exchange so I can see that you're putting on? And they don't do that. So that bothers me. And what really bothers me is how misleading it is to beginning traders, because they think that this is like some magical secret sauce, and it's not. And there's not a lot of risk management that goes into these Elliott wave charts. There's not a lot of sound evidence, and there's levels of understanding technical analysis. So like I was talking with somebody about this last night. So for example, let's take TD sequential, for example, right? Let's take TD sequential. So if you guys are familiar, and if you guys don't know anything about TD sequential, you guys can go check out my video in the Trading Crypto 101 section, or playlist on the YouTube. I have a very long video on how to master TD sequential, as well as a recommendation of what indicator to use on TradingView. But for example, like a 9, right? Like a 9 to the upside is generally an indication to sell. So if you're a beginner, you would see that and you'd be like, well, TD's flashing a 9, so maybe I should sell. Okay, that's a novice, right? That would be your analysis. That would be your declaration, right? Say you're in a Discord or you're talking to people, right? You're like, well, it's printing a 9, maybe I should sell. A beginner would say, TD sequential is printing a 9. I've done some back testing, and it seems that is a good opportunity to sell, so I'm thinking about selling. Like that's kind of a novice. A competent person would say TD sequential is printing a 9, and that's an indication to sell. I feel that if I set a stop loss here and a take profit here, there's good to risk to reward, so I'm going to establish a sell at this level or a short position at this level. Now that's competent, right? Because now you're talking about now you're providing actionable intelligence based off your analysis. The worst thing is this, like the problem with analysis is that you'll see this all the time in Twitter, dude. You'll see this all the time in Twitter, all the time on Telegram, all the time in Discord. It's just, and stay away from it. Run away when you see it. Is a chart with indicators or lines or whatever, and they're just explaining to you what stuff is doing on the chart and not telling you what we might be likely to do based upon that information. That's the critical factor. Anybody can throw indicators onto a chart and say, well, we're having a bullish TK cross. Okay. Okay. Anybody can say, well, look, we're having a golden cross. You know, the 50 exponential moving average is crossing over the 100 or whatever. Okay. Or we're at support. Okay. I see that stuff all the time. What's your trade recommendation? Like, what's your setup? Show me a trade. Show me what you would do based upon that. That's what you want to see. That's what you want to see. And whether it's somebody's actual account or whether it's just clear, concise information like, hey, guys, based upon these metrics, I feel that establishing a position here with a stop loss with these metrics and looking to take profit in these metrics, and perhaps I'll set a trailing stop under these, that's good actionable information because that's a trade. That's a setup. That's something you can go to your computer and execute. And when you are able to confidently spot setups in your own head, you're progressing from beginner to being competent in technical analysis, or just being competent in trading in general, right? So, all right, guys. Hey, All Infinity, thank you so much for the sub on YouTube, man. So I think Bitcoin will make no lower lows. I think that is the most likely scenario, yes. Zero Cool says, BTC is putting in a 1-2-1-2 inside the impulse wave 3 ABC correction. Oh, shoot, man. Daniel Clerk, shout out to you. Nerd Robert says, I am waiting with 100K to buy Bitcoin. Can't see any sign that we are bottomed. Watching Bitcoin since 2017, it's become an obsession for me to find the bottom. That's absolutely fine, man. It's, you know, what else are we going to do? We're waiting here to see the bottom, because what happens after the bottom, we just go up and up and up and up and up and up for an extended period of time. Not just directly up, but up and then down and then up and then down. But in general, more up than down. You know, like we would all like to see for Bitcoin. But I will tell you this, man. Don't become overly obsessed with buying the bottom is my general recommendation. There's plenty of opportunity to buy, even if there is a confirmed bull market. Like the reason that a lot of new capital is not going to flow into Bitcoin until it's above 6,000. There's two areas where a lot of fresh capital is going to flow into Bitcoin. There's going to be a lot if we capitulate and find a panic sell bottom. Okay. And there's going to be a lot when we go back above 6,000. And the reason why there's going to be a lot when we go back above 6,000 is because as an investor, if I'm looking at the Bitcoin chart, it's pretty clear to see like, well, above this line, bullish as hell. Below this line, who cares? All right. So if Bitcoin's price goes back above 6,000, convincingly, like closes above 6,000, like on a daily or a weekly time frame, you're going to have a lot of trapped shorts that's going to provide rocket fuel and a lot of fresh capital that's going to be pouring into Bitcoin, because that's when a lot of investors are going to look at Bitcoin and be like, yep, we're back, let's go. And, you know, they just click the button. That's a very easy way to look at it, man. Like I know very successful traders that'll look at the chart like once a week and then be like, all right, it's not done this yet. Moving on. You know, it's just one way to look at it, man. We don't have this market control. All we kept say is whale is on control. It's possible, man. E-Wave is like trying to surf that wave from the movie Interstellar. You will die. Ken Master says, how long have I been doing technical analysis? About 10 years. I've been practicing and studying technical analysis. What is my opinion about Alessio Rastani? I don't have a strong opinion, man. I've seen a couple of his videos. You know, it's difficult to determine without doing like a deep dive into somebody's background or history. You know, like how valid their information is. I mean, he doesn't seem to be like a scammer or a shiller or anything. And some of, you know, the couple videos of his that I've watched like seem pretty intelligent. So not bad. $1 Bitcoin no fun. I would like that just for a minute or so. Moon him up. All right, so let's get into the Bitcoin chart here, guys. At I don't know what, a half hour into the video. Okay, so let's just be clear. Let's just be pretty clear about this. And actually, let's go look at the USDT chart, guys, if you don't mind. I want to start off with the USDT chart. And I was just kind of playing around and looking at some different stuff earlier. But, this is largely boring, man. This is just really boring. Consolidation around a supply zone. We didn't really tap into, just on a wicking basis, we didn't really tap strongly into supply. So to be quite frank with you, if you're looking at this market right now, there's really not a trade to be taken, guys. If you guys will recall, the last time we had a market situation like this was pretty much back here is what I'll refer this to, but this is just kind of flipped around and inverse. Here we were clearly on our way up. We have a nice bullish, convincing candle body close out of bottom consolidation off of strong horizontal support. Consolidation to the downside is natural. We put in a nice barding, but just classic, some would call it a flag, some would call it a pennant. It doesn't matter. Price contraction to the downside. But what this is indicating, if you're analyzing price action, is that, listen, you had incredible strength. You had an incredible show of strength from the bulls right here. There was an incredible tap into demand at this point in time. You have two very impressive 8-hour candle closes, a very impressive daily candle close on very high volume, on very convincing volume, breaking above resistance and out of consolidation. Okay, you could even throw in, hey, there's a double bottom there for good measure, but I don't think that's necessarily important. And then if you guys will recall, let's see if it's still on my MEX chart. If you guys will recall, let's go down to the 3-hour chart. No, I don't think it's there. I think I deleted the lines. But anyways, I had drawn the pitchfork on the structure. And at this point in time, this was the first time that we actually convincingly closed above the midline, consolidated. And I said at that point in time, all pullbacks are now for the purposes of buying because we have convincingly closed above a level of resistance in a classic bullish formation. So we did, and then we ended up going up. So, we traded Ethereum to the upside. I talked about that quite at length on the stream about being long at 122.50. And then when we were up here, I kind of talked about the exact same thing again. Very nice, beautiful ascending triangle formation, break to the upside. And then as we were sitting up here, I said everybody I was going short based on the metrics that I had looked at, based on the MDR, based on the bid-ask sum, based on the longs to shorts ratios, most likely, based on social media sentiment, and just based on proximity to higher time frame resistance, guys. Just pretty clear. You even get this candle right here. You even get a nice evening star candle to let you know. And then just right here, a classic shooting star pattern. If you weren't in a short right here, I don't know what you're paying attention to. Anyways, so I've seen a couple different things, and there are a couple different ways to look at this. Quite honestly, I'm not sure how important this is going to be, but just price contraction to the upside. I don't trade wedges or any of that kind of stuff, but if you did want to look at this as a broadening bottom type pattern, typically that will resolve to the downside, but I don't really trade those things. Basically, if you're not sitting in a position right now, there's really not a trade to be taken. There's really not a trade to be taken. If I had to put statistical odds to this, I would probably put more money on the fact that we see higher price action before we move lower. All right. I know that everybody is kind of rushing to short this, and in the short term or overall, that might not turn out to be the wrong thing. But anyways, I look at a chart pattern like this, and there's just multiple ways to look at it. Broadening bottom, bear flag, but just in general, we do have just basically off the lows, we do have higher lows. And so far, we only have one high to really measure this off of. So depending on really what happens over the course of the next day or two, depending on if this breaks, if that represents a high, that doesn't look really good. I would expect that to break to the downside. So basically, if you're not sitting in a position, there's a pretty simple way that you can do this, man. If you open and close an hourly candle to the downside below this ascending trend line, you can look to take a short position. And if you open and close an hourly candle above what I consider actually to be horizontal resistance, you can take a scalp trade to the upside. If I had to put money and bets on it, what I would most likely expect to see is I would expect to see price move up a little bit from here and look to go fill in that gap. We talked about this yesterday, and it's funny. It's like after I talked about this, people started sending me videos about like everybody talking about it. I'm not exactly sure how much weight I hold on this wonderful platform that is YouTube. But anyways, let's go look at the continuous futures and front contract on BTC. We could also look at the March contract, but whatever. And I talked about this yesterday. I talked about the gap being filled. Now, does this represent the gap being filled? I don't know. It doesn't really seem supremely convincing to me. But in general, this area that's pretty confluent with the other levels as well represents an area to be short from. Now, if price were to break up, and I'll just be completely consistent with what I said yesterday, if price is able to close above this level, especially on a daily time frame, then I would actually expect to see price go higher. I would actually expect to see price go higher, because that would mean that we've tapped into enough liquidity to go higher. I would expect us to get a negative reaction again from the top. Why? Because we have a lot of trapped sellers, to be quite honest. A lot of individuals bought at the tops here, and as price returns, they're most likely going to sell at break even. That's also why this area right here is going to represent resistance, and why my first scenario is to add to my short position at this level. So I'm comfortably in a short from 41.14. So I have the luxury to really do nothing. I have the luxury to really do nothing. If when price, if and when, I think if and when, honestly, at this point, when price comes up here to tap on this area that was supply, here's the thing. When you have a level that you expect to act as supply, which is the yellow initiation level on my chart right here, that's congruent with like 39.50. When you have a level that is supposed to act as supply and price just runs train right through it, and we can see multiple examples of this. For example, here we go. Here's a good example right here. Back during this previous level. Let's see if we get a good. There's a couple different ways to look at it. So here we have what should be support turned into a previous resistance turned into support. As you can see, it acts as resistance here. It acts as resistance here. Price runs train through it, and then now it acts as support. Okay, it acts as support. Price just crashes through it, and in the future, that level acts as resistance. All right, this is a pretty common pattern to see. Very similar over here. You have resistance, price shoots through it, it comes back and acts as support. It's really the act of invalidating that level, meaning that you've had an SR flip. The second confirmation comes when you actually do come down and bottom off of it. But anyways, for the purposes of what we're talking about right now, we have an area that should have acted as supply around 39.54. So there were going to be a lot of blind limit orders here. That's just how it works, man. A lot of people blind limit bought here because they thought they were buying the dip. And they just got their faces melted off. They just got wrecked. And as price returns to that level, they'll likely sell at a loss. Now, we'll see if there's enough buyers, if there's enough demand to absorb the price. I mean, this is kind of an area that's pretty critical, man. Like overall, I do think that the most likely scenario is that we continue to go lower and make lower lows. But we're kind of in an area where the market could prove everybody wrong at this point in time, because it happens. This is how markets turn around. This is how markets turn around. The best laid plans of mice and men, ladies and gentlemen. So we're not at an area. Anybody that looks at this chart and says, we're definitely going down, bro, or we're going to the moon, they don't know. And they're being completely fraudulent, in my humble opinion. Why? Because we're in no man's land. Like, we're absolutely in no man's land. This could absolutely represent a dip. Liquidity could come in and we could push all the way up to 4,600. And I think I would feel fairly strongly that if we do open and close above 3,900, 3,950, I think that we probably go up there, and I'll be in a long position. I'll be willing to take that bet. I'll be willing to take the trade to the upside. If we reject from that level, I'll add to my short position. And then getting down, as I said, previously, if we get down below 3650, I'm adding more to my short position, much more. Because at that point in time, we do go down to test 3,300 most likely. So for right now, there's really not a trade to be taken, guys. There's really not a trade to be taken. Just sit on your hands. There's not always a strong trade. The strong trades are at the bottom. The strong trades are at the top. If we take a look at the 24-hour, let's look at time transformation on the 24-hour time frame. It's telling us absolutely nothing, man. It's telling us absolutely nothing. We rejected from the neutral zone. I talked about this previously. We rejected from overbought conditions. We printed the first potential overbought. Didn't get the strong sell signal from time transformation. That's because we didn't actually have the crossover in overbought territory, which is one of the qualifiers. And as I said, we hadn't had an overbought signal like that since back in August. We hadn't been there since August. So on the first pass through, hell yes, this is a sell. And now we're just back at the neutral zone. We're just back at the neutral zone. We're not crossing up. It's going to take some time. We're in a period of consolidation. So on the higher time frames, no signal to act as far as time transformation goes, and there's just really no need to act. Let's look at some other indicators as well. If we look at volume profile and we only look at the current trading range, where we're at, we're kind of in no man's land. We're at consolidation at an HVN. We've bought up this area at the bottom, so we have a very large HVN that basically establishes the middle range of our trading zone. Now, it's not the point of control because the most heavily traded point of volume is actually down here in the 3650 area. So that's why I do think that if we close, 3650 represents my lower take profit target. So that's my last take profit target on my short. So getting down below that level, instead of taking profit, I add to my position, I pyramid it. So I've taken profit. The way that I've handled this particular trade is I've actually taken profit on the way down, and I would look to re-add at 3,900, 3,945 on the first go through. I think it gets sold into. If I'm proven wrong, it does allow me to still get out of the trade at profit, and I will establish a long position and look to go for higher targets. And I'll do that analysis then. But just on its face, my initial targets in the short term, I would probably ignore 41.31 because that was a target to the upside, and this was my stop loss. If you guys will recall, back during when I originally did my trade, I had entered at 41.14. 40.96 represents higher time frame resistance, the beginning of higher time frame resistance. I said upper side targets that we could possibly stretch to were 41.31 and around that 42.20 area. But for me, my stop loss for my short trade represented 42.28. So that's already been tapped into. So that's no longer a critical level. So getting back to the upside, getting it back above that 3,900, 3,950, I'll most likely just be targeting 44 to 4,600. There are levels that we can be a little bit more specific with, like 44.15 would represent a good area. But basically, when you break above resistance, you generally look to take profits at previous swing highs. So the first level that fits that bill for me would be about 4,400. Just looking at the BitMEX chart, and then if we go to the weekly, time frame, we can actually see why I have a trouble area. Why I have a trouble area where I have it at 46.24, and that's because of this level right here that does represent higher time frame resistance. So that's either resistance breaking above that level, you establish more into your long position, and then your next level of resistance obviously comes around 5,000. There's multiple levels of confluence for that. Not only the horizontal level of support and partial retest of resistance, but also volume profile characteristics as well, because you have aggressive initiation around that level. For people who were doubling down in their short position who hadn't been able to get into their short yet. Going back to the daily time frame of analysis, Ichimoku, if we look at Ichimoku, we're still in the cloud. We found support on the Kijun. We do have a tentative bullish TK cross. So, again, putting our moon boots on, this would actually tell us that we're going up to 5,000. Because typically when you do break into the cloud, you expect to see an edge-to-edge trade. That's just typical Ichimoku analysis, especially getting our first TK cross that we've had for a while. However, the last time, this is a lagging indicator, the last time that we did get a scenario that looked like this, okay, the market rejected more. So it's kind of the same thing when people are talking about golden crosses and bearish death crosses. Generally, and just my opinion on this is quite different. By the time you actually have the death cross or the golden cross, the market's probably, the first couple times you get something like that, going to react in the opposite direction because it's lagging to catch up with what current price is going to do. And again, any indicator or any indications or levels on the chart where a lot of traders are likely to do the same thing or think the same thing is generally, it's going to be an area of liquidity. Because if you have, for example, like a golden cross, like if it's like all over Twitter and all over YouTube that a golden cross is going to mean price is going to skyrocket and we're close to a top, well, you've got a lot of people in profitable long positions that have large stacks. They can't just market sell. They're going to need liquidity to absorb their orders so they don't get out, so they can get out at the price they want to get out at. They're going to use those levels to sell at because they know that retail traders are going to be FOMO buying, not FOMO buying, but just buying what these random indicators are telling you to do. So Ichimoku. Looking pretty bullish on its face, but again, just consolidation, man. To be quite honest, honestly, you don't have a confirmed bullish TK cross. I would like to see the Tenkan-san very strongly, very significantly above the Kijun. But right now, just as with exponential moving averages, when your conversion and your baseline for Ichimoku are flat, it just means consolidation. So in consolidation, especially fresh consolidation like this, probably the best move is to do absolutely nothing. If we take a look at our moving averages, and for some reason I gotta adjust this because it keeps resetting on me. I don't know why. It's killing me. I don't want all this stuff. I just want my normal stuff, guys. I've saved this as a default. I think this is more TradingView out to get me because ever since they did their update, it's just god awful, man. I just hate their update, man. Okay, looking at the exponential moving averages, again, kind of the similar thing. We've got our 21 and our 55 are flat, as well as our 8 on the daily time frame. Means price is flat, man. Some people would look at this and say, hey, you're having consolidation between the 8 and the 21 and the 55. Yeah, but I mean, really, exponential moving averages for me represent trend, right? So they're flat. meaning price is sideways. So, again, just as I said with using horizontals, which I think are probably more confluent, using horizontals, but if you want to use exponentials, that's fine. You trade in the direction of the breakout. If you get a confirmed breakout, which for me is going to be a 1 or a 3 hour candle above that level of resistance, for me, I'm going to be using the horizontal level of like 38.30. To be quite honest with you, my battle plan actually at this point in time is going to rely around establishing a bit of a hedge long on the futures contract. So if price dips down to what I think is a fairly attractive level, I've got an alert set for if we dip down into these wick areas. If we dip down into wick city here, I'll probably snatch up a small long position to hedge against what I have open as a short. The plan still remains to add to my position at 3,900 to 3,950. But if I'm proven wrong, then I can roll my short position open that I'll be closing out in profit. I can roll that into my long position and already have an established good average entry. And rolling that in will give me an average entry somewhere around here. So I'll already be in the money, whichever way this decides to go. So feeling pretty happy about that, feeling pretty confident to just be able to sit on my hands after a few days of immense volatility. Last night we were watching the 10-second chart when all this happened, and it was just funny to see. It's just funny to see people sell the bottom. It's just funny to see people sell the bottom because stuff like this. And maybe if I let's talk about this for example. I want to talk about trading and consolidation, man. I want to talk about trading into consolidation. So when you have a period of consolidation, the reason why you want to be very careful about buying the breakout or the breakdown is because guess what? It only happens once, right? You only actually break out once. You only actually break down once. So the odds, okay? So the odds that whatever you're looking at when you're looking at a period of consolidation, right? When you're looking at a period of consolidation like this, right? Man, time transformation doing some killer work here on the freaking 5-minute chart. Anyways, when you're looking at a level like this, okay, and just to show you, I don't cherry pick. This would have got your face ripped off. So always use an indicator with caution. Whenever you're looking at a range of consolidation like this, right, and you're looking at yourself and you're like, okay, so here's support. Here's resistance. Here's the trading range. You can look at VPVR to help you establish that. You can look at session volume. Okay, so here we go, right? So at this point in time, right, like when this happens, people in their heads generally think to themselves, oh my God, it's going up. I'm going to miss it. I've got to buy. Bro, the reality is that breakout only happens once, okay? So the odds that that's the breakout is very small. And the odds that the breakdown that you're trying to sell into or short into is very low. When you're ranging, you just trade the range, okay? You use a momentum oscillator, and when it's oversold, you buy. And when it's overbought, you sell. And you're going to be right most of the time because you're only going to be wrong one time. And that's when the consolidation level breaks, and that's when you can flip and trade in the direction. Yes, you're going to take a small loss. But the reality is consolidation could go on for quite a while. Yeoman's work. You're darn right, Ryan Atkinson. But so many people are just so emotional when they see price go toward a bottom. And you just need to train yourself. You just need to realize you need to step back. Anytime you're about to click the button and sell or buy, just stop. Because you've got time, right? You've got time. Because the reality, if it is the breakup or breakdown, right? And what everybody's terrified of, and let's just be quite honest, right? Everybody's just terrified of something like this, right? They're like, bro, I went long here. And look at that. This could be the moment. $500 death dildo. But the odds that it is are so low that the opportunity cost isn't there. Because the couple times that it happens could really mess you up, man. Could really mess you up. But the statistical likelihood that it is very, very, very low. So trade the range when price is ranging. Use a momentum oscillator. I recommend time transformation. It works pretty well for me. But stochastic, RSI. Stochastic is better than RSI, but I digress. MACD is pretty decent. MFI is probably one of the best. But anyways, just use a momentum oscillator and trade the range, man. When you're oversold, buy. When you're overbought, sell. And just scalp the range, man. And look to establish, or if you want to swing trade, look to establish positions toward the bottom. Because if you're wrong, you're wrong. You have 50% chance of being right or wrong. Because the consolidation can only break one way. It's either going to break to the upside, in which case you're validated, or it's going to break to the downside, in which case you took a loss. And that's trading, man. It happens. You know, it's pretty nice to have a 50% chance of being right or wrong, you know? Thank you, Jasper. I appreciate that, man. Ding. Anyways, so that's the thing, man. Like, my rule of thumb is whenever you're about to click the button, and it's here's the qualifications. If you think price is tanking and you're about to short, or you're about to exit your long, or if price is mooning and you're about to buy or exit your short, just wait 10 seconds. Just stop, pull back, count to 10. And wait 10 seconds. Wait 10 seconds and ask yourself, does this make sense? Do I really think this is the breakout? Is this likely to be the breakout? Odds are no. Because the breakout only happens once in a consolidation period. And prior to that breakout, you have multiple wibble wobbles. That's a technical term. Don't let me catch you using it. Yeah. Any users? That's pretty much what's going on, guys. We have consolidation, and it would be wise for you to trade the range until the range breaks, and then you trade in the direction of the break. VPVR is going to help you establish the range. Moving averages will help you establish the range. But these are pretty much times where you live in the day trading timeframes. The 5-minute chart, the 15-minute chart, the 30-minute chart. Things like VPSV, VWAP, moving averages. They're going to help you out a lot. All right. All right, let's get to the chat. Sorry, guys. All right. Dun, 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 dun. From a psychological standpoint, I don't think the bottom is in until people who bought at 6K finally cave and sell. That's classic consolidation theory about the situation. So you're definitely not wrong in that mindset. How long have I been watching the BTC USD chart? Since 2015, I guess. I didn't start trading until 2016. Kevin Stewart, I think I talked about Elliott wave theory quite extensively. Nothing against Mr. Tyler Jenks. I'd be happy to have him on the show. I'd be happy to have a conversation with him, but I don't put a lot of weight in Elliott wave analysis. I don't think it works. What do you think will happen to Bitcoin if we enter into a bear stock market? It is likely to take a more significant hit until there emerges a fundamental. It's likely to take a hit right along with the stock market. I'm not going to lie. But from a fundamental perspective, we're already so entrenched in developing institutional solutions for Bitcoin right now. There's already too many platforms and vectors set up to engage with Bitcoin and to inject institutional money into it. And there's already too many fundamental use cases for Bitcoin to be used as a hedge, alongside with gold, alongside with silver, alongside with other assets as well, for a declining bearish stock market. But initially, I think it would likely take a hit. Yes, it is a risk on asset in the eyes of investors still. So, and no problem, man. Eduardo Contreras says, love the explanation on trading analyst. Levels would be a great conversation topic for sure. I am a really good analyst, but I am not profitable for my analysis yet. Well, that's good to hear, man. That's the first step, man. The first step is understanding the charts, and then understanding analysis is different from trading. So analysis is great. You can actually make quite a bit of money from that, like telling people what you think is likely to happen. But trading has to be if this, then that. And you have to act, and you have to have courage, and you have to be patient, and you have to understand how to master your own emotions. Because analysis is all well and good, but if you're in a long position and you see price tanking, you have a very irrational, very rational actually, but you have a very powerful emotional instinct to sell or exit your position, and that's very difficult to overcome. It's very difficult to overcome. I've been doing this for a while, and it still happens to me, right? But that's why, you have to master your own psychology. Like, for example, I guess one of my great problems was being more disciplined, right, in my daily schedule, right? I didn't want to eat healthy. I didn't want to get up early. I didn't want to make my bed. I didn't want to, exercise every morning. So there's just all kinds of tools and tips and tricks and emotional kind of cheats and hacks that you can come up with to kind of power through that. So in addition, if you guys are interested in the lifestyle and being a trader, I do highly recommend that you put a lot of emphasis on studying psychology, as well as mastering your own emotions, and just coming up with simple challenges. Like for example, right? Like if you want to be less impulsive, right? Like take something that you don't ostensibly have a problem with, like if you eat cookies and you usually eat 3 cookies, right? Like eat 2. Like just make a rule. Like that's something simple. That's something simple that you should be able to do. But it's just a small check. It's just a small tick to make you more to make you a better master of your own mind, which is very necessary. Yeah, I agree, Nightfoot. Jonathan Krause says, stupid question. There's no such thing as a stupid question, except for when moon. Is simply buying the simplest, most basic form of going long? Yes, buying is going long. Yes. Generally, when we refer to going long, we're talking about futures, but it's in essence the exact same thing. Yes. Hey, what's going on, Dominus Spinay? Hey, what's going on, Dr. Faz? He says, can you explain why we had more barting in January and in February? Things have been more calm and there's been less volatility. Then these bullish moves versus January's barting up and down like crazy. Let me reread that. Can you explain why we had more barting in January and in February? Oh, can you explain why we had crazy... Okay, so essentially why we were barting like mad in January and why in February things have been calmer and less volatile. Okay, that's actually fairly easy to explain because we were coming off a very strong dominant trend, right? So we were trying to trend flip, okay? So when we trend flip, so we have a very strong dominant bearish trend. The bulls try to put in a little bit of resistance. We resume the dominant trend, but basically all you're seeing is a very... to be very quite honest with you, man, what you're seeing is you see this in traditional stocks, but the wicks and the barting from Bitcoin is pretty nasty. And that's just because of the liquidity, the volume, and the thin order books, in general. But all you're seeing is a battle to attempt to flip trend, right? A very valiant battle between demand and supply. On its face, it does kind of seem like demand is winning. I'm not going to lie. This has all the setups to be potentially bullish, guys. And that's why I'm saying, like, as somebody, there's a difference between analysis, right, and trading. So analysis, I'd say this probably goes lower. But there is a convincing case that this represents a shift in trend. So we'll see, guys. Sam Bond says, can we say that we're in an ascending channel with the blow off at the top? A bull trap. Maybe if you're just measuring from here. I guess, yeah. You could ostensibly draw something like that. Like a broadening top pattern. according to Bulkowski, which most likely would resolve to the downside, technically. What are the indications that it will plow through those previous support resistance levels? Basically, the best thing that you can look at, man, is volume. Volume, and then on lower time frames, you'll often see stair stepping. So let me show you guys. You guys, depends on every movement's different, but you're going to see it the best on the lower time frames. So pardon my internet connection while trading view loads for me. But if we go look at this breakout, basically what you generally see is something like this, man. And I know sometimes it's difficult to spot, man. But basically what you see is you see a bottom, generally on high volume, right? You see a bottom, you see a wick generally that looks like this. But it still establishes, well, this one is actually a pretty good one because this is actually a stop loss hunt. So stop loss hunt or a grab for liquidity or a higher low. And then something that looks kind of like this, man. Where you just start like marching up on low volume after you put in low volume to the downside. You just start stair stepping up, and then, you know, you close above resistance, I mean, watching the 5-minute chart, you got plenty of time to catch this, man. It doesn't matter if you enter here, here, or here, you know, like you can catch that. You just ride it. You see something very similar if we go back and look at, let's go back and look at the breakout previous to that. All right, here we go. Okay, so you have consolidation, and you've got liquidity grabs to the upside, a lot of FOMO buyers there. That's another good thing to watch for, man. Like if you see an area, liquidations, like if you go to Tensor Charts or BitMEX Rect or whatever, whenever you see a lot of liquidations, because a lot of shorts got liquidated here, generally a good time to go short, because that would have been a great scalp to the short side, right? That was like a 4% short trade. But as you can see, liquidates the shorts, okay? And then what do? We put in a higher low, and then we just start stair stepping toward resistance. 5-minute time frame. See? I mean, this is price action representing to you that the bulls are very strong right now. I mean, that's stair stepping, man. Like the bulls are very strong right now. The bears try to push back. Bulls push up. Bears push back. I mean, just higher lows, higher highs, higher lows, higher highs. That's bullish. I mean, just on its face, that's bullish. Like, look at this. Strong reaction from the bears. Higher lows. Keep going on up. Higher lows, keep going on up. And then here, you see a little bit more strength from the bulls. You see some consolidation. You keep pushing up. You keep pushing up. Keep pushing up. Just keep pushing up. And then you pop. So just look for price action to tell you who's weaker or who's weaker and who's stronger, demand or supply. So right here, like there's a couple ways to look at this. You see 2 higher lows, lower highs, or excuse me, higher highs, higher lows. Probably a good opportunity to buy, especially after you see resistance get taken out here. So you see a higher low, 2 sets of higher highs. You break resistance on this candle. Probably not a bad place to go long. So that's a good one. If you're watching something like the hourly chart, when you generally break resistance, you do it on a convincing candle closing basis with good volume, generally. So that's another thing to watch for. So meso time frames, so something like the hourly. Let's find a good example here, mate. So here we have consolidation. Here we have consolidation. So we have resistance. That's that yellow initiation line right here. And you can see right here, this is kind of a bad example of it because there's a big wick. Generally, my rule of thumb is convincing candle body close on high volume out of consolidation. That's a good indication that price will continue on in that direction. Big wick above consolidation or below consolidation, generally a good indication that that was a stop loss hunt. You had a lot of liquidations and price is going to move in the other direction. But in this case, you do put in a decent candle on high volume out of consolidation, and then you open and close the candle in the same direction. And that's I mean, you have to take the gamble that price is going to continue on and you establish a long position. Similarly, try to find another good example that isn't a massive death. Right, so here's a good example, right? You have consolidation. You have consolidation here, you see, right? And you see a massive wick on high volume. That's an indication that you just had a lot of longs liquidated and price is going to go in the opposite direction. Same thing here. You have consolidation, right? And you see a massive wick to the upside on high volume. Price is going to go in the opposite direction. Same thing happens here. Same thing happens here, right? You clear out all the longs. A lot of people went short on this candle. You clear out all the shorts, and then price ends up moving down. So I'm trying to find what is the best example of when you could have gone on here. I mean, you see that stair stepping right here. So if you zoom down to like the 15-minute, or the 5-minute, you're gonna see that lower low, lower high pattern, right? And again, after 2 consecutive ones of that, you buy the next rally or sell into the next rally. It's typically the way that you would do it as a day trader. But same thing here. And I guess you don't really have a strong indication to short until right here. So you have consolidation. You have consolidation pretty much in this range right here. And then if we look over here for unnatural volume, we don't really get it until this candle right here. Right here, this candle. Right? Because we have a convincing candle body close out of consolidation. And after we've already seen downward stair stepping. And that's when you're taking a bit of a gamble, because I look at this and I'm like, God damn, we're close to the bottom of the range. Do I really want to short that? But, you know, probably worth taking a stab on. And it would have worked out for you pretty well. You would have had a decent trade. And calls to exit that trade, honestly, are when you see stuff like this. You see stuff like this. Big wicks, high volume, generally an indication that price is going to move in the opposite direction. And this one, it took a couple stop loss on. It's bump, 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 but then price did go back up. So, high volume breakout or stair stepping on lower time frames is generally a good indication. Or you wait for something like, which you will see, I guarantee you. You wait for stop loss ons. You wait for liquidity grabs. So, anybody that's, like, think about it, man. Anybody that's entering in this range, if they're going short, their stop loss is going to be here. Okay. Their stop loss is going to be right about there. And anybody that's going to be going long, their stop loss is likely to be right here. Okay. So we have predictable levels of stop losses. So it'd probably be smart, instead of going short here, which I think is stupid, or going long here, to be honest, set your order here and set your order here. Okay. Or that's risky, but that's smarter than just entering into consolidation and not with a plan to trade the range, right? The other thing to do as a reactionary trader is wait until you see that convincing candle body close above or below resistance, above resistance or below support, or until you on the lower time frame see fairly convincing stair stepping after a liquidity hunt, or wait until a liquidity hunt. Wait until a big ass wick on high volume, candle closes on a wick, go short, because likely price is not going to continue going up. If you see a massive wick to the downside and it closes back up in the range, probably go long, because that means price is probably likely to move in the opposite direction. All right. Yeah, my daughter was pretty mad out there, man. Hey, Eli, good to see you, man. Thank you so much, Dominus. I appreciate that, man. And I don't know how to pronounce your name, my good friend, but hello from Russia, man. Thoughts on Keltner channels? I do like Keltner channels. I like the TTM squeeze as a great indicator. I used that for a while. Yeah, I agree with you, Anis. Hey, Justin, what are your Ichimoku settings? When I open Ichimoku in TradingView, it does not look like your cloud. So I use conservative crypto Ichimoku settings. This is kind of like the standard that just gets kicked around. Don't really know who this all goes back to, but I know that I use them this way. Fibonacci uses them this way. CryptoCred uses them this way. I don't know who's responsible for coming up this way, but I find that they work quite well. So I use 2061, 2030. So basically, so what I've done is, the other way to do this is 10, 30, 60. You keep 30 as your displacement, but 10, 30, 60 is going to be your aggressive settings for Ichimoku. And 20, 60, 120 is going to be your conservative settings for Ichimoku. So you get less signals. So with the 10, 30, 60, you're going to get a lot of signals, and it's not bad, especially if you really want to be an aggressive day trader. It works pretty nice on the 15-minute chart. But if you want to be a more conservative trader and really get those swing signals, I think, using Ichimoku, I recommend using 20, 60, 120, 30. Most of the traders I know that are pretty successful using Ichimoku and crypto use these settings. Dr. Fat, put a Coke in the fridge. Come back 2 to 3 hours later. Watch it. Grab it and smell it, but don't crack it open and place it back and walk away. That's exactly what I'm talking about, man. Just little things like that, dude. So instead of a 12-pack, I'll just drink a 6-pack tonight. Somebody asked me to take a look at BAT and give me tips on any tips on when is a good time to buy for the longer term. That's going to be difficult to tell you but I will take a look at BAT. Man. David Meislinger, happened to me that I panic sold on Monday. Should I buy back or wait? I would wait, man. Don't really know what's going to happen right now. Request for maker. Only got about a half hour left in the show, man. Maybe I can glance at it. If not, I'll keep it on the schedule and we'll look at it tomorrow, bro. MakerDAO. Remember hearing a lot to do about that, man. I hate XRP because I hate fidget spinners. Okay, so I mean that's really what we got going on, guys. Consolidation. You can trade the range if you want to be more of an active day trader. Me, I'm a little bit more focused on finding the long-term swing setup, and that's just going to have to be patient and wait. I know the guys are probably killing it with the range trading, man. Especially if you just got something fairly simple, man. I don't think that my default setting is going to be working very well here for trading the range on the 15-minute chart. Let's see if we can't pimp this baby out. Getting a lot of signals there. Let's try. Really don't like trading views new thing, man. Seems like that wasn't too bad. Let's not calculate. Yeah, that's not too bad. 5's not doing too bad. 6 isn't doing too bad. 7's doing pretty good. 7's doing pretty good. It had you, one good trade so far. Just using the, that one's not too bad either. Bought here, sold here, shorted here, covered here, bought here. Not too bad. Especially if you're using divergence as well. A lot of other signals. Yep, you have regular bearish divergence here. You have hidden bullish divergence here. You have hidden bullish divergence here. You got oversold here. Unnatural volume here. Unnatural volume here. Yeah, this thing's killing it, dude. All right. Let's take a look at some of those requests, guys, because it's just kind of a lazy day in the market, man. How do I change my candle colors on TradingView? Can't seem to figure it out. So you're going to right click. You're going to go into settings. And it's right here, man. Candles, borders, and wicks, man. You can change them all, dude. Ohm sauce, they all sold Sunday. All right, let's look at the schedule. We've done BTC, and we're going to skip Ethereum because it's basically Bitcoin with more volatility. So in a situation like this, range trading, more profitable to trade, to be quite honest with you. All right, so let's glance at BNB. We're just going to be able to do glances, guys. I apologize, not the full long-term analysis that we normally do for this stuff. It's 1:26. I need to grab some water. All right. You guys give me just 30 seconds, man. I'm going to go grab some water. While you're waiting, guys, make sure you head on over to x42.krakencryptocurrency.com and sign up for the Masternode giveaway, guys. Let's try to break that $2,000 entry barrier while we've still got 5 days left, guys. So make sure you guys go check that out. Also, if you haven't already, guys, make sure to hit that smash button or smash that like. Hit that smash button, man. Yeah. Rocking the cash bot. Nah, man. Give us a thumbs up. And in the meantime, enjoy these soothing tunes from Ryan Little West Coast, guys. We'll be right back. All right, and we're back, guys. Thanks for hanging in there and keeping with me, guys. All right, let's take a look at what we got going on here, guys. Bitcoin CME futures. There's Oost. Bummed Oost. All right, so here's what we got going on, man, with BNB USDT. On its face, this doesn't look really good, man. I got the 8-hour chart pulled up. We are approaching a level of demand. We are approaching a level of demand. So this should act as a level of supply. The next level of supply that we do have is $8.35. This isn't really a situation in which I want to buy the dip. This actually doesn't look quite good, man. If this 8-hour opens, or excuse me, if this 8-hour closes below this level fairly convincingly, I don't like it, man. I don't like it. We get a nice bullish reaction off of here. I think we probably could pop up a little bit. But as far as like, is this a buy the dip situation? I don't really think so, man. I don't really think so. Tell me something good. Yeah, see, we already rejected from the 50% fib retracement. And just as, you know, if we consolidate here toward these lower levels, it's typically not something that you want to see, man. I probably would be a much more interested buyer on the retest here. Let's see, we already bought this up once, twice. Does it hold for the third time? Nah. To be quite honest with you, man, it seems like the market needs to come down a little bit from here. You know, I've been saying that about BNB for a while, so I could be wrong this time, but this just looks a little bit different, man. I mean, the last time we did see something very similar was this, and we did see that this nice girthy candle right here was actually a good entry opportunity, but it would have been a lot better to see the bullish reaction off of it. I'm not really in a situation where I want to be grabbing any falling knives right now. This does have a high propensity to just bust on down to $8.35, where I might become an interested buyer, man. But to be quite honest, man, like, I said that, you know, BNB is not any kind of asset where I want to be a buyer, man, until quite honestly, probably down here around $6.86. That seems a more logical retest of support. Kind of my go-to is the 50% fib retracement. Generally, when you see a parabolic movement like that, you do retrace 50%. I've been saying that for a while. So if the entire market's going to take a pretty significant hit here, it seems to me a lot safer to just wait until we have confirmation that we're going to have another leg up, than attempting to catch a falling knife when everything just seems to be most likely on its way down. The opportunity cost is not there for me, man. Opportunity cost isn't there for me, so not an interested buyer. Doesn't look really fantastically good. 8 hours oversold. I'll give you that. 8 hours oversold, but who really cares? Doesn't mean you're really gonna put in something amazing. If we look at the 24-hour time frame, yep, we had regular bearish divergence right here at the top. Thank you so much, time transformation. Time transformation actually gave you the sell signal right here, which would have been a very decent sell signal. So it did dollar cost averaging on the way down. So you would have obviously, if you would have entered here, you would have obviously been proven wrong. No real reason to pick up on any of these. So again, I think I adjusted these settings a little bit. So see if we can get them to filter out some of the noise. I got them on default, but you know, that is what it is. Did give you some nice buy signals here at the bottom. And honestly, even if you would have dollar cost averaged into this, you know, which the way that any kind of momentum oscillator will have you do, even if you would have DCA'd down into this baby, that would not have been my approach to trading. I would have taken this trade, been wrong. I would have taken this trade, probably been wrong. I would have taken this trade, probably held on because I do see bottoming here. Or it would have put you in for a nice sell here because you get hidden bearish divergence. And then here you start throwing up regular bullish divergences. And then you go on a nice run. But again, plenty of opportunity to be in this trade, just as I talked about with stair stepping. So we have a higher high, higher low, higher high, higher low. And then you can either buy the next dip or you can just buy the breakout of resistance, which would have had you buying right here. You double up on the dip if you want to, and then you're in for a very nice trade. You know, very nice. That's still a 60% trade. You don't always have to catch the absolute bottom, man. You know, like I know 150 sounds really good, but to be quite honest with you, man, like if you can't look at a 50%, 60% trade and be like, happy with that. Don't know what to tell you, man. Yeah, it doesn't look good to me, man, to be quite honest with you. The daily is coming down to the neutral zone and actually going down below the neutral zone. If we close the daily below the neutral zone, I would expect us to come down here to at least $8.35. But to be quite honest, more likely we find support down here around that 618 Fibonacci retracement, around $6, $6.80, $6.50 potentially. We will reevaluate this and keep our eyes on it. But I mean, let's look at the week. Look at the week and see where we're at. Yeah, man. I mean, we just came up into nice bullish run up, consolidation, breakdown. The first time you come back up and retest support, it's a sell, man. It's a sell. And after a nice parabolic movement like that, you typically come down 50%. So not an area where I want to be a buyer, man. Yeah, you're exactly right, candlesticks. Well, there is overbought and oversold when you're ranging. Oversold and overbought are ranging indicators. So when price is moving sideways, you buy when you're oversold and you sell when you're overbought. When you're trending, you trade in the direction of the trend, man. Darren Trewick says, your chart colors are rubbish, man. Thank you so much for your compliment, man. I'm going to take that as a compliment. Different strokes for different folks, man. All right, so we looked at BNB. I said I'd look at NEO. I think my analysis on USDT coins is going to be pretty much like, I'm not really into them right now. Pretty much on everything. I'm really not so much of an interested buyer. Yeah. Higher time frame resistance, blow off top, high volume, and a big wick. What does that generally mean? Movement in the opposite direction. We do have tentative support coming in here around $8.35. We will see that will be a bullish sign if we do find bullish support off the range top, basically. But yeah, it doesn't look amazingly good, man, on the weekly. On the daily, you see the same thing. Blow off top, high volume, pretty large wick to the upside, just as you saw with everything else, man. Still consolidating at the upper level of its range. So, you know, if we start climbing up above 916, next upside targets are $12.85 and $15.57. Our next significant level of resistance is $16.13. Too uncertain, man, for me to enter. Very nice bullish run like that. Again, you generally get a 50% retrace. But like I said, we've got range support down here at about $8.32. See if that holds. If that doesn't hold, $7.61. And below that, I don't really see how this is going to act as support. This is very similar to that level as I talked about with that $3,400 level with Bitcoin. It's been bought up here, here, and here, and here. It's been bought up 4 times. Actually, it's been bought up 5 times if you consider this range right here. The more times something is bought up, it's weak. It gets weaker. BAT. I don't think they have a tether pairing. In fact, I'm pretty sure they don't. They have a USDC pairing. Bitfinex or Bittrex and Poloniex, they do have a tether, but we'll just look at the Bitcoin pairing. Looking good, man. Very nice. Very good pump on BAT, man. All right, so let's think about this logically. Couple ways to draw this, I guess. I guess you could draw it that way. I don't know if that would be correct. You could draw it this way if you want. I think that's probably the better way to draw it. All right, let's draw it that way. Make it red. That's not going to be very bright. Cool, whatever. Pump and dump. Pump and dump. Pump and dump. Pump and dump. This time will be different. I don't know. Typically, big volume spike, long wick, price generally moves in the opposite direction. Now, again, you can make the case that, well, look, bro, you do have consistent resistance and support right here. And I don't really know why these horizontals are on that. Those are obviously lower time frames. So let's get rid of those. Let's get rid of those and let's just look at the big picture. Okay. You wicked mistress. Okay. So this would have fit the bill. This would have fit the bill for a good breakout pattern. I talked about this with Ethereum, and I talked about this at length. Put in a bottom here on some pretty strong volume. And again, you close a convincing candle on high volume above consolidations. You have consolidation right here. You close above it. Once you do that, generally pullbacks represent opportunities for buying. So again, higher high, higher low, higher high, higher low. Again, you can buy the pullback or you can buy the break above. But you definitely, I would not recommend chasing parabolic movements like that. Definitely don't want to chase something like that. Now, there's a lot of volatility, man. You zoom down, and I think you could probably successfully day trade BAT all day long. But typically, when you see a big-ass movement like that, man, I wait for some consolidation. When you enter on high volatility, it's fine, man. You just have to be very, very careful with your entries and exits. Pump, consolidation, massive pump, pretty big pullback. Let's see, where would you want to? All right. So there's a case to be made for an entry right now for a 50% retracement. Typically, when you buy 50% retracement, you try to do an equilibrium swing. Actually, you try to do an equilibrium swing. So that would actually be a very bullish maneuver or attempt. And, you take profit at the range high, and you look to take profit at the equilibrium swing. But so that would actually be 69.71 sats. That's the very bullish scenario and setup. So obviously the R to R is there. Doesn't mean it's going to be a successful trade. But the other way to look at it as well is big ones. Is if you buy the 618, you target the 236, and if you buy the 786, you sell the 382. 618's got some good confluence with what should act as support on the first go through. And actually, you can see that the 618 was tested. You could say the 618 was tested. So I can see a case. I can see a case here for a buy and a target of the 236. It's about 11% trade. Just understand that it's inherently risky because you've already had a pretty significant move. And generally, when you see this in altcoins, it dumps. But this time will be different. I'm sure it will be. I'm sure it will be. This is the beginning of the bull run. And I really like BAT, man. Don't get me wrong. I really, 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 really like BAT. So let's see where this candle closes, man. Like I said, we've kind of got that resistance trend line. We've only closed above it once. We've only closed above it once, and then we just had that. It was just a prelude to the blow off top. This is more like blow off top now. So, kind of depends on where the candle closes, man. I mean, just classically, when you have resistance and you close above, you break out of long-term consolidation on high volume, it's typically a sign the price is going to continue on in that fashion. But when you see a massive wick like that in high volume, it's generally an indication the price is going to go in the opposite direction. So, I don't chase parabolic movements. So, I would wait for some consolidation above support, and then if support holds, then you could take this baby higher. We'll revisit this tomorrow because I'll be interested to see where the daily candle closes. And then the last thing that I said I'd look at is MakerDAO. Looking good, man. Nice run. Very nice run. All right, let's see here. All right, daily time frame. Time transformations throwing up sells. Threw in a buy here, threw in a short here, buy here, take profit here. Again, when you get a momentum oscillator, this is the way I use time transformation. When you have a very strong trend, and you get a sell signal, it's typically an opportunity to take profit, and you wait for confirmation that the trend has ended before you fully exit your position. But we do see something a little different here that we see here. Again, we see a little bit of that sideways consolidation. This does look like distribution. A lot of wicks to the upside. Yep, unnatural volume, regular bearish divergence on this candle, overbought conditions, and throwing up sell signals. So, generally, higher high on the oscillator, lower high on the oscillator, high in price action, higher high in price action. Daily time frame divergence is a pretty strong indication for me that price is going to reverse. Your next area of logical supply would be down here at 15.1530 cents. So that's awesome, dude. If you doubled your money, listen, you never want to exit a trade too quickly. So there's a couple ways to look at this, man. Throw on some Heikinashi. Okay, so the daily Heikinashi is green. If the daily Heikinashi turns red, you exit your trade. That is just the most. It's a very simple way. If you guys want to make sure that you don't get out of a trade, you can use something like Ichimoku. Ichimoku would tell you that you're really not out of the trade until you have like a 50% retrace. But another way to look at this too is that, I mean, you take profit, a logical area is to take profit, something that looks like a blow off top in distribution with bearish divergence on the daily, and then you become an interested buyer closer down to your support. Exponential moving averages can keep you in a trade. You can say that, look at how well we've been riding the daily 8. If price opens and closes or closes below the 8 exponential daily moving average, then you exit your trade. And you become an interested buyer around the 21 and the 55. So either of those metrics can keep you in a trade. Definitely, man, I'm looking at that, and I'm definitely wanting to take some profit off the table. Definitely want to take some profit off the table. I mean, the likelihood that it just goes boom before coming down and exhausting. I mean, just look, you have a nice run right here. You pull back. You have a pretty significant pullback too. You have 12% pullback. After a second up thrust like that, the likelihood that you have a less than significant pullback, unlikely. Take profits when you think you see market tops, man. Definitely an opportunity to take some profit, and then just wait and see how it works out, man. You don't have to take all your money off the table. Let it pull back. If it finds a higher level of support and continues going up, buy the confirmed push up. Just like I said here, higher high, higher low. You can either buy the dip or you can buy the confirmed breakout, which would have had you buying here, and you're in for a very nice trade. At about 18, 12% on the table right now. Hey, what's going on, my Sally man? All right. It is 150. I'll see you later, Sean Bond. Take it easy, man. There we go. That's a little bit clearer to see. You just keep doing your thing, Bitcoin. Which trading view should I use if I get... Well, it's not my membership basic. Oh, okay. So subscription to the group. You can use a free trading view account. I do recommend... That's interesting. Twitch fell off. I do recommend that if you're going to use... that if you're going to look at trading more, more seriously, and you're going to do a lot more charting, I would recommend that you get at least the pro account. Just so you don't have ads popping up all the time, man. So you don't have ads popping up all the time. You can have more chart layouts on your screen. You can save more chart layouts. You can save, you can see more charts on your screen. You can put more indicators on your chart if you so want. I think the pro plan is definitely worth it, man. Norbert Chong, top of the morning team, man. Good to see some people from Ireland, man. Hell yeah. Did I see Engine Coin blow up? Yeah, when I woke up. That was crazy, dude. Samsung Galaxy S10 news. He says, I got a 4X and the only coin I hold in a bear market, so I am a genius. Yes. Cheers to the hodlers, man. Cheers to the hodlers. Let's see here. Ron Legato says volume profile. Let's look at it, man. Not really telling us a whole lot, man. Telling us consolidation. This is the trading range that we've been in. No confirmed breakout or breakdown. Bitcoin is in a range. Generally, you buy, and when you're in a range, you buy oversold, and you sell overbought. It is that simple. Because the range only breaks once. Only breaks once. Breaks to the upside, you go long. It breaks to the downside, you go short. It is that simple. I didn't do Ethereum extensively because it's going to look just like Bitcoin, but more volatile. But basically, this is my opinion right now. If you wanted to be safe, you might pick up an ETH H19 long. But in general, the level between 142 and 144 are for adding to your position at this point in time. I think if we get above that, very similarly with Bitcoin, I think we do see higher price action. 162.45 and 192.28 actually for Ethereum. Probably a brief stop in the trouble area of 175. That would be the first. That would be where you want to definitely reduce about 50% risk. But the most significant level is 192.28. $200 psychological significance or resistance, excuse me. But oh yeah, on the pro account, you get to use the volume profile. Yes, that is the other great benefit of it. You get to use VPSV, the volume profile, and fixed range, all of which are fantastic elements to your trading. I would like to have. I wish they would add. I wish they would pimp this out. I wish they would pull into the ape. I wish they would pull into the exchange and pull the order book. And then I wish we could apply the volume profile on the order book. That is a powerful tool. I wish I could do that direct from TradingView. Anyways, guys, it's 1:55. You know what time that is. I got to get going, guys. I'm going to get with the, I got to look for some day trading opportunities here with the group, man. I'm working on some more sessions in my course. So I'm working on finishing the videos for horizontal support and resistance and trading into consolidation. Those are going to be released to the members here fairly soon. Also working on another strategy of mine that I haven't publicly released. That's about it, guys. I want to thank you guys so much. I mean, we got a lot of great viewers. It's always a good show. It's always a good time, guys. So, regular end of show stuff. Prepare yourself, guys. All right. So, I just want to say goodbye to everybody. And again, thank you so much for joining me on your way out. Highly appreciate it. If you hit that thumbs up button, give us the sub if you haven't already. Cruise on over to twitch.tv/KrakenCrypto. Give us a follow or a sub on there if you'd really like to support us. We appreciate that very much. I do want to give a shout out to all the proud supporters of the show. So let's head over here. Of course, X42, Vector Security Coin, MMO, Your Crypto Daily. Make sure you guys go check them out. Head on over to x42.krakencryptocurrency.com. We are giving away 5, count them, 1, 2, 3, 4, 5 masternodes worth of X42 coin, guys. So enough to stake your masternode. All you got to do is go to this website, click some stuff on Twitter, and you're in, man. If you guys want to trade along with the group, if you guys want access to my indicators, if you guys want access to the private Discord, all the trade setups and signals from the trading or from the Kraken Cryptocurrency team of analysts and traders, links at the top of the page, guys. Premium.krakencryptocurrency.com if you'd like to see the services that we offer. Still looking for anybody that'd like to help us out with graphic design, thumbnails for YouTube videos, or videography, or if you guys would like to be a writer on our blog, you can contact us at contact@krakencryptocurrency.com, or you can hit us up in the Discord, guys. So I guess the question that I have for you guys, is, which direction do you think it's more likely that we break out of this consolidation? And how long do you think the consolidation lasts? Do you think we continue on our way down, or is this a buy the dip opportunity? All right, I've expressed my opinion. I'd like to hear yours. Leave your comment in the section down below, or come on over to discord.krakencryptocurrency.com and keep the conversation going, guys. In the off times, it's always where you can catch us, and everybody that hangs out in the Discord, guys. That's about it, guys. I've been Justin Wise, your host for the show, guys. Another episode of Breaking Bitcoin. Hopefully, I've helped crack cryptocurrency for you. And until tomorrow, guys, at the same time, 12 p.m. Central Standard Time, make sure you guys trade safely. And I'll see you tomorrow.